Ladies and gentlemen, welcome back to another video. I'm your host, TheDividendAristocrat, and in today's video, we're going to be taking a look at all my dividend income for the month of September. We'll also be highlighting my individual positions in the companies that paid out those dividends, as well as any buys or sells that I did for the month. Now, if you guys do enjoy this type of content and appreciate the transparency, I'd appreciate if you could subscribe to the channel. As a reminder, this is not financial advice, and I'm just merely sharing my opinions on this channel. With that being said, let's start by taking a look at my portfolio dashboard. So in total, I invested $54,000 into the portfolio, and my current portfolio value is worth $74,677. That does put me pretty close to my record highs, and a lot of that is thanks to the market just absolutely racing these past couple weeks. I'm going to use VOO as my proxy here, but if we take a look at the past month, it's up 3%. In the past 6 months, it's up 32%, and that's from that bottom of that tariff dip basically. Now to see a more realistic picture, let's take a look at the past year performance, and we're now up almost 17% over the past year, not including my dividend income that I reinvested back into these positions. Now for my unrealized gains, I'm currently sitting well above the $20,000 mark at $20,665, and my total return is about 38.26%. Now in total, across my entire lifetime of this portfolio, I've earned $2,100 in dividend income, which I've reinvested back into the positions that paid it out. But going forward, I'm expected to earn $1,154 per year, so over half of my total earned over the past 5 years. Now, although my dividend yield and yield on cost are pretty low, 1.55 and 2.14% respectively, you can start to see how these are going to compound over time. Now my cash position needs to be updated, but it is somewhere around this range, so it's not too far off. My total holdings are about 21, and I am looking to cut down some of my positions over the next couple weeks if I can before the end of the year. The main reason for that is I just want to clean up my portfolio. I don't want to be focusing on so many different companies. It'll be much easier managing just a few select companies. Now I don't believe I'm going to cut it down by too much. Right now my goal is to get it to around 18, and we'll see where we go from there. Now, if we zoom down here on this table, you can see my years, so 2020 to 2025, and how much I invested and how much dividend I received each year. In 2020, I invested $2,800. Fast forward to now, I've already invested almost $20,000 in 2025. And for 2020, you can see dividend income was about $1,245. And fast forward to now, it's already $698. Now, we have about 2 months left in the year, so I'm certainly going to be passing this number from 2024. And you can see this graph right here shows the pretty good explanation how quickly we're growing. Now over time, this growth will slow down because the amount I'm adding to my portfolio is not increasing by as much, so my portfolio value is staying more similar across the years. In terms of which stocks pay me the most, you can see that right now SCHD is actually ahead of VOO for the first time in a very long time, so it's my biggest dividend payer, and then we have VOO in second place. Now if you guys already saw from the title, SCHD did pay me a dividend this month, and it's the biggest one I've ever received from SCHD, so I'm excited to get into that. Now before we delve any deeper, let's hop into my future value calculator and simulate what my portfolio value might look like in the next 10, 20, 30, or even 40 years. Now right here, you can see my future value calculator. It takes in a couple assumptions and helps simulate portfolio value in a future time frame. If you guys want to grab a copy for yourself for free to try out, you can check out my Patreon. You can download it for free from there. So my starting principle is what my current portfolio value sits at, and my annual contribution is how much I'm expecting to put into the portfolio every year going forward. Now for this year, I put in almost $20,000, but going forward, I'm expecting to be putting in less, so we're going to use $12,000 as my estimate. Now in terms of dividend income, I'm just using my portfolio's overall yield, which is about 1.55%, and dividend increase and price appreciation can be adjusted as needed. So for dividend increase, I think 8 is just a little bit too aggressive. Let's assume we're going to get about a 5% dividend increase per year for my positions on average. And then for price appreciation, we can go a little bit more aggressive. Let's assume we're going to get an 8.5% price appreciation per year. Taking those assumptions into consideration, we can see my portfolio value at year 10 will be worth about $335,000. Now I just want to fast forward to the 30-year time frame here, and you guys can play around with this as much as you want if you download the copy for yourself, but in 30 years I'll have about $2.6 million and my dividend income will be about $13,000 per year. By that point, my total dividend earned by year 30 will be $184,000, so it definitely does begin to stack up. Now, the only other thing I want to point out here is let's assume that we have slower price appreciation. Some people prefer a little bit slower growing stocks with a higher dividend increase or higher dividend yield. So let's assume the dividend increases a little bit faster than that at about 12%, which would be a little bit ridiculous, but why not? Taking those assumptions into consideration, you can see the portfolio value is actually a little bit lower at year 30, but the dividend income is much higher, $92,000. Now, without further delay, let's take a look at all my dividend income for the month. This is every single stock that paid me out in my taxable account. So the first one here is Visa on the 2nd of September, and we can see that it paid me out $1.80. Now, real quick, for any of you guys that are new to the channel, what I do here is I track every single one of my dividends, and I have a separate section that tracks every one of my buys and sells. Now for the dividends, I put the total order and I put the quantity that I reinvested to get into as well as the date. That gives me the estimated price that I bought each share at. So basically I got $1.80 in dividends and I reinvested to get 0.005 shares at $360 per share. Now going down the list, you can see the amounts here. 0.259 shares were reinvested from the $24.63 dividend from Target. Now I'm not going to go into specifics for each one, but you can see that S&P Global is 488, Microsoft is 340, 3M is 82 cents, Google is 737, Northrop Grumman Corporation is 239, Home Depot is 488, United Health paid me two separate ones at 1358 and 1703, and SCHD paid me a whopping $63.32, which is absolutely insane. Now the reason United Health is split into two separate dividends is because I recently opened a Fidelity account. I'm trying it out, seeing how I like it before I move all my funds into Fidelity from Vanguard. So some of this position is in Vanguard, this 1358, and some is in Fidelity, this 1703. Now again, I just want to point out SCHD here. This is a massive dividend for me. The dividend keeps getting larger, the yield itself, which is nice to see, but also I keep increasing my position by adding more shares into it. Just to show you guys what I mean, here is all my buy history for the entire month, and if you guys do appreciate the transparency, consider leaving a like. It does help out the channel a ton. So every week I'm adding one share of SCHD to my portfolio, and I'm also adding $100 of VOO. So you can see right here that I bought one share at $27.64, and then I bought 0.1685 shares of VOO at $593.4, which was about a $100 order. Now I have been doing this every single week so far this year, and this is the first year that I'm implementing this strategy, so I'll let you guys know how I like it, and at the end of the year we'll decide if I'm going to continue doing this going forward. Now the only unique thing to point out here is I did decide to buy 4 more shares of Target when it dipped down to about $86.46, and it actually has been pretty beaten down these past couple weeks. Hopping into Google, we can see how low the share price is trading. In the past 6 months, it kind of recovered from those tariff dips all the way up to about $106 per share, and since then has dropped back down significantly, bottoming out at about $86.30. Now, I think this company has a long road ahead of it for recovery, but I like the current starting yield, and I think it's still a solid business with a good chance at a turnaround. Because of that, I think adding and holding my shares at these lower prices with that high dividend yield and reinvesting those dividends is going to play out for me really well in the future. Now, if it doesn't, we'll take a look at my position in a second, but it is about 3% on portfolio value, so the risk is not currently too high. Regardless, I'm going to keep monitoring this position over the next couple quarters and seeing if there's any chance of recovery from Target. They're currently trading at a pretty low price to earnings ratio, so the valuation is not too demanding. Now, the only other thing I want to point out here is that I do keep track of my money market dividends, so all my settled cash that's not invested into any specific stock position sits in a money market fund. Because of that, at the end of every month, I do get paid out a dividend basically, or some interest on that position. And you can see right here that I keep track of every single one. Now, the ones that are labeled VMFXX are from Vanguard. I have much less cash in there right now, so I got paid out $245 this month. And then SPAXX is Fidelity, and that was $24.05. And I have a larger cash position because I'm trying to move over some of my portfolio into Fidelity at the moment. Now, this is not tracked anywhere but here. It's not added into my dividend income for the portfolio, but just so you guys know, my total that I've earned so far from these money market interest is $902. Now, let's briefly take a look at my holdings that paid me out the dividends this month. So you can see all of them listed out here. I just filtered them out from the rest of my positions. Now, the way I've currently organized it is from my highest performance to my lowest one. So Microsoft is currently my best performing stock at over a double at 128%. And then we have Target as the worst one at 8.94% in the red. Now, Target and United Health are 2 of 3 of my only red positions. So the other one is Booz Allen Hamilton, but United Health is getting pretty close to my cost basis. I paid about $379 per share, and the current price is about $360 per share. Now, this is one of my larger positions. I invested over $5,000 into it, so I do hope that it recovers over the long run. Now, one thing that I want to point out is if I only held my original shares of Google and never purchased another share, it would actually be outperforming Microsoft because I did buy them below $100 per share, but I've since averaged up my price to about $140 per share. Now, with all those gains, Google is my single largest stock position. This is not including ETFs at over $8,600. Now, in terms of dividends, we can also sort this from largest to smallest. So the largest one is SCHD. Over time, it paid me $530, which has all been reinvested back to give me a lot more shares of this company. Then we have United Health at over $100, and Target's trailing pretty close behind at $97.31. That's because that dividend yield is so high right now. Now, because I'm in the red on Target, you can see that my yield on cost is actually lower than my yield, which I never like to see. But over time, I hope that my yield on cost will, of course, be larger than my yield. Now, in terms of my annual payout, which is how much they're each going to pay me per year, SCHD is the largest here at $256. United Health is second at $123, followed by Target at $117. So every year I'm going to get paid out about this much from each of these companies. So finally, we can sort by allocation, and right now Google is by far my largest single holding at 11.5%. This is not including my ETFs. If we include ETFs, VOO is actually significantly larger, but Google is still a very substantial position. Now for me, this is a little bit high for my preference, but at the same time, Google is a fantastic company I believe still has a larger runway for growth. We then have SCHD at 9%, and then United Health at 6.7%. Now, believe it or not, when I first started this portfolio and I started adding into individual stock positions, Microsoft was, I believe, my second largest position, but since then has dropped significantly to about 2.8% of the portfolio value because the new positions I create are much larger. At the time for Microsoft, I only invested $927 into the position, but also my portfolio was much smaller in value, so this felt significantly more substantial. As my portfolio has grown, I've started increasing the amount I invest into each individual company in order to match the size of my portfolio. Now, hopping into my monthly breakdown section of my spreadsheet, you can see right here every single year and every month for the year how much I invested and how much dividends I received, and we can fast forward now to 2025. So the cell highlighted in green has conditional formatting, and it basically finds the largest value within any of these cells. So that's my record amount of dividends for a single month. Now, if we look down here at September, that's this month we're talking about right now, it's actually at $144.10. So it's really close to my record month, but couldn't quite hit it. Now, the main reason for that is because SCHD paid this month, but VOO did not. So the next time we have VOO and SCHD paying on the same month, I'm likely to beat this record, which will be in December. Both December and March tend to be big months for me. December was my previous high for last year at $141.80. Now, at the start of this year, I started investing very heavily. During the tariff dip, I was going crazy, basically putting as much money as I could into the portfolio. And since then, I've slowed down my investments, as you can see these past couple months. Now, in terms of monthly dividend income, the chart does go up over time, but it's fairly sporadic because of my large concentration in ETFs. Now, before we wrap up this video, let's take a look at my dividend calendar, and I basically saved the best for last. This is my favorite part of the video, is taking a look at this calendar because I believe it shows the best representation of how my dividends are getting paid out and how they grow over time. So the way that my dividend calendar is structured is that I have the ticker symbols on the left and then I have the months up top, and basically it shows how much dividends I received each month for each ticker. So the best example here is actually Home Depot, and that's because I didn't add any more shares into the position this year. So in March, I had $482 paid out from dividends. Then in June, it grew to $485, and that's from reinvesting those dividends. And then now from reinvesting those dividends, it grew to $488. Now these increases are small, but over time they do compound pretty effectively. Now, a more interesting example is SCHD because I continue to add to this position and it's also one of my largest payers. So I got paid $51.51 in March, then $59.30 in June, and now $63.32 in September. That brings my total up for the year to $174.13. Now, if we want to look just in terms of month, we can see the total for the month right here, 144.1, and then the total for the whole year is in this bottom right corner at 698.1. As always, that does bring us to the end of today's video. I really hope you guys enjoyed taking a look at my portfolio and seeing how much I got paid out in dividends for the month of September. Now, if you did make it this far into the video, let me know down below which stock paid you the most this month. If you haven't yet watched last week's video where I talked about my favorite stock to buy to bet on the real estate market, check out this video right here. And if you want to check out 3 REITs that I think might be a good opportunity to buy after the Fed announced interest rate cuts, check out this video right here. Remember, the best time to invest was 10 years ago. The second best time is today. I want to thank every single one of you guys for watching, and I will see you in the next one.